People need an income that's guaranteed to them.
If you lose money to taxes, you're never getting that money back.
You need to get serious about adding some lower risk.
Greed. I don't like greed.
The thing to be afraid of, honestly, is the thing that we're not thinking of, the black swan event.
There's a tsunami coming. Bye.
Welcome to Retirement Coffee Talk with Charisse Rivers.
Just coffee talk.
There's a lot of noise, a lot of chatter. Who do you listen to? Who do you not listen to? You have to stay focused.
A fun and informative look at the issues of wealth, retirement, and protecting your life savings.
These advisors out there that were trained to sell, and have all these fees. They don't want to talk about this product, so they make less money.
And now, Retirement Coffee Talk with Charisse Rivers.
Hello again, and welcome to Retirement Coffee Talk with Charisse Rivers at Zinnia Wealth. My name is Randy Cook, and each week Charisse and I sit down here and talk through some of the headlines that are financially related, but it's also what we want to do mainly is talk about you, your concerns when it comes to you and your money. There's this thing coming up called retirement. You're wondering how that's all going to work and who's going to help you kind of plan through all of this. That's why we introduce you to Charisse. How are you doing today?
Oh, I'm fantastic. I have a toenail missing. I have 4 blisters, and we are in the final countdown.
Okay.
Da-da-da.
So yeah, you're getting ready. You're getting ready for a big hike. That's coming up the first weekend of September.
I know it is upon us, and my feet hurt. And this hike is a 36-hour endurance challenge. And I did this 6 years ago, and I said I'd never do it again. But then my buddies convinced me to do it again. Mm-hmm. And they said, you haven't done anything super hard mentally when it comes to like physical fitness. And I'm like, okay, let's do it. I'm getting older. I got another good one in me. And so it's called Everesting. You are hiking the distance of Mount Everest, and it is a 20% incline most of the way. Some areas are like 40% inclines. So it's next level. You got 36 hours to finish it. It's in Canada, and my director of operations is going, and my girlfriend Sarah is going. So we are all going to try to do this together. My director of operations, Becky, she is a hard charger. She is going to knock it out of the park. I'm half ready, and my girlfriend Sarah is totally not ready. So we'll see where we all land. But we'll do some videos from the mountain. It'll be fun. We'll show you some pain points, and we'll post all that stuff on social media, Instagram and Facebook, anybody who wants to follow. But yeah, I'm eating tons of food, so I'm not losing weight. And you have to, while I'm practicing, I did a 9-hour hike last week, and every hour and a half, I'm eating something, because you have to do that on a mountain or you won't be able to finish the mountain because it's so hard. I mean, I've done half marathons. I've done some hard stuff. There was nothing harder than this for me. So I'm excited about it. It's fun. I'm meeting like 20 other buddies of mine up there. So it's going to be great.
As you know, if you've listened to the show for a while, you know that Charisse was on Fear Factor in earlier part of her life, and that part of her has not gone away. That is for sure. Well, speaking of fear, let's talk a little bit about people in retirement and the fear of stock markets and such like that. That's kind of one of the things that we talk about regularly around here. And so I'm going to bring up Warren Buffett for just a second. So I know every time I bring up Warren Buffett, people look at me and say, yeah, but I'm not Warren Buffett. I don't have Warren Buffett money. I get that. But sometimes we can look at Warren Buffett and not look at the zeros and just see what he's doing and wondering if we should do that. And so over the last year and a half, Warren Buffett has been de-risking in stocks. He's been getting more out of the market and moving more toward cash. He now has $344 billion in cash and cash equivalents. I don't know what percentage that is of his wealth, but that's a lot of money. So the question is, Charisse, is as the market continues to go up, everybody on the financial networks talks about when's it going to go down? When are we going to have a pullback? Everybody worries about that. Should we be taking a cue from Warren Buffett and moving more toward protection?
So people are a little worried about the stock market right now, but they're a little bit optimistic because of a lot of the good news we're hearing on the table out there. And Warren Buffett's strategy is, his number one rule is don't lose money. Number 2 rule is follow rule number 1. And he has now officially pulled about $344 billion into cash. So he's waiting for opportunity, or he has another plan. There's no telling what his plan is, but we never want to invest based on Warren Buffett does, because he's got business. He's got a lot going on. So a lot of people are like, Warren Buffett is going to cash. Should we be going to cash? And no, we don't want to go to cash. We want to stay invested in something, because timing the market and trying to buy a stock or sell a stock sometimes can be miserable and hard, and you can lose by not getting in at the right time. So I would say, don't follow Warren Buffett's strategy. I would say follow the strategy that you need. So if you are 50 years old, your strategy will be different than a 60-year-old. And if you're 70-year-old at this point and you're living in retirement, your strategy is going to be totally different. So we want to focus on 3 strategies: the income strategy, the growth strategy, and the protection strategy. Income makes the world go around. Income, income, income. Where are your income checks coming from? And you should have 5 income checks in retirement. And that's something that we specialize in. It's this withdrawal strategy. So if you're embarking into retirement or in retirement, cash maybe for 1 year's money, to cover whatever you need for a year is fine, but those dollars do need to be invested. But you have to start figuring out, what do the rest of the dollars do? If you're conservative, you don't want to go in the stock market, you're worried about, like a client came in, he's like, I'm worried about tariffs and all this Bitcoin noise and all this stuff going on. Should we be invested? And I said, yes, we should be invested. We have enough cash. If something happens in a short run that's making 5%, or we have some really great short-term safe money strategies that people are really enjoying right now, and we can park a couple of dollars in there. So being strategic with your withdrawal strategy and how you're going to get your income, no matter if the market goes up or goes down, is number 1. So in retirement, strategy, income plan is key. Now, number 2, Randy, you got to have protection. That protection comes with income planning, because if you had your money in the stock market, there's no protection. So they kind of come hand in hand. So we combine those 2 together, and that's really important. But we also need to have growth in a portfolio. Growth in a portfolio is going to help keep up with inflation, give you those extra dollars maybe you weren't planning on. So having the right growth strategy is actually important, and that might be being in the stock market. So all key things when it comes to portfolio protection, income planning, and growth at the same time.
So I think we had a conversation similar to this not that long ago, and it was actually before April when the market did a significant decline and then jumped back up again. And I think we were talking about Bezos and Zuckerberg, and they had gone and sold a whole bunch of their holdings too. And I think our discussion was, sometimes wealthy people have a schedule throughout the year that they sell, and they watch the market, and they have a schedule to do this. It doesn't necessarily tip us off to anything. Or somebody could be buying a house and they needed cash. It's just like you and I. And so they sell a certain amount of their holdings in order to fund that. So sometimes we can't look at rich people and say, okay, let's do what they're doing.
Right.
I think that's probably good advice.
Yeah, and remember Bezos, he was selling the heck out of his own stock, Amazon stock, because he was moved to Florida, and the taxes were minimal to where he was up north. So, when you're selling billions and billions of cash, sometimes it's for a tax strategy also.
Yep. We would love to have the opportunity to talk to you about your strategy. And if you don't have a strategy, let's build a strategy for you in retirement. This is an opportunity for you to sit down with Charisse and say, okay, this is what I've done for the last 20, 30, 40 years while I've been working. Here's the 401k. Here's the IRA. This is what I've done in savings. This is what I've done in holdings, my portfolio, so to speak. And what is that going to do for you in retirement? What does it mean per month? That protection, income, and growth that Charisse talks about. Do you have all 3? With a 401k, you've got some place to invest, but do you have income? No, a 401k doesn't provide income. We have to do that for you in retirement. Let's have that conversation. Here's what you can do. Go to our website, which is zinniawealth.com, ZINNIA wealth.com. There's a gold box right there, and it says complimentary retirement consultation. That's exactly what it is. It's a meeting where we get to know each other and put the papers out on the table and figure out where you are and how we can help. You can find that on our website. When you click on that, put a little information in there, and our team will reach out to you. Or you can skip all that and just call us, 833-368-3680. 833-368-3680. All right, going to have a little fun here. One of my favorite comedians of all time, George Carlin. You remember the hippy-dippy weatherman and the 7 words you can't say on TV? But this is my favorite routine of all time.
That's the whole meaning of life, isn't it? Trying to find a place for your stuff. It's all your house is. It's a place to keep your stuff while you go out and get more stuff. Now, sometimes you've got to move. You got to get a bigger house. Why? Too much stuff.
That is hilarious. I love that.
A fun routine. All right.
It's so funny we can still use his stuff for
exactly.
our radio show. We've been doing this for years. I love it. Stuff.
Well, this is what we tell you to do when you come in to see Charisse. Bring all your stuff.
I know. Bring it in a box if you have to.
Exactly.
I prefer you to upload it and get it to us ahead of time so we can pre-plan, but if not, just bring it in a box.
Too much stuff so many times. All right, so let's talk about your stuff for a second. We've got material stuff that we've accumulated in our life, which George Carlin is talking about. We've got financial stuff that we have to sift through and figure that out as well. Charisse, the whole thing here when we sit down together is, where should my stuff be? Where should my money be? And when I leave this world, where does my stuff go? So that brings us into another part of financial planning, which is estate planning. So let's talk a little bit about a place for your stuff.
Where people miss out a lot is they forget their estate plan and how important it is to have those things in order. And how many famous people have we heard of that didn't have a will or a trust and their assets are going through probate? People are getting their stuff that shouldn't be getting their stuff. And this is why estate planning is so important in the first 12 months when you work with us, because we want to make sure you have your will, your trust, your power of attorneys, your healthcare surrogate. Who gets your money? Is it going to be your kids? Is it the surviving spouse if it was a second marriage and then it goes to the kids? Is it half to that spouse and half to the kids? Is it going to a charity or 501c3? Do we want to gift it now and watch the kids enjoy it now while we're alive and then leave some in the back end if there is any, right? So planning your estate is key and it'll help you figure out how to spend your money throughout retirement. So why, number one, is a will so important? A will dictates who gets your stuff. So if you don't have a will, they hire a stranger in that doesn't know anything about you, and they divvy out your stuff, the stuff, your car, your motorcycle, your couch, your NFL ring, whatever it might be, to maybe somebody you did not intend to actually receive it. And depending on the state you live in, half of it could go to your kiddos and half of it could go to your siblings based on state rules. So you want to make sure you understand the state rules and you have this will done. It's about $250 to get a will done. So I encourage, will is one of the most powerful documents and you've got to have that if anything. This, in my opinion, power of attorneys and healthcare surrogates, two of the number one most powerful documents that you need. Power of attorney, what happens if your memory goes and you can't write checks or you don't understand money anymore? There has to be somebody in line, it's typically the spouse, that is able to do those things for you. And just because you're married doesn't mean you get to do those things. You got to have that stuff documented, believe it or not. And always have an alternative person in case something happens to both husband and wife, right? Or somebody you really trust. Same thing goes with the healthcare surrogates, another form. Who's going to make those decisions if your memory goes, you get in a car accident on, hey, we're pulling the plug. Hey, this is the surgery we're going to get, whatever kind of emergency you have. So we need that person in line. And of course, that is the surviving spouse. And again, you want the alternative person in case something happens to that spouse. Last but not least, powerful document. It's called the trust. And if you like Susie Orman, she says everybody has a trust. And if you are breathing and living, you better get a trust. And I don't believe that to be true because we know some math. We understand how probate court goes. And yes, a lot of people should get a trust. And the two biggest things that go into probate are your bank accounts and your house. And a lot of people are like, I thought I had a beneficiary on my bank account, but some banks don't allow you to put beneficiaries on. All you have to do is walk into the bank. If you don't have a beneficiary, I'd be calling them today and say, give me a TOD form, transfer on death form. And then you can put your beneficiaries on there. Your homes, you can do it on your own. You can go get a Ladybird deed signed and notarized, file it with the courthouse, and it keeps the house from going through probate. But again, I don't recommend you going alone on any of this stuff unless you're a super whiz kid. I always refer it back to our attorneys. We got attorneys in all of our cities and all of our offices. If you need that help, we get some discounts from our attorneys also. And we've been working with them for years. If you are looking for an estate attorney to help you with your trust, your wills, your power of attorneys, and all those things. But I will say this, if anything that goes into the trust skips probate, let me help you understand what probate is. Probate is a pain in your rear. That's what probate is. You put anything through probate because you didn't have a beneficiary on it. It could be a year to 2 years before your beneficiaries, after you've passed away, receive any of your assets. And that's a lot of money, especially if they want to sell a house or you have land and they're having to pay the taxes and insurance on it the whole time. And it's time consuming. And it is the bread and butter for these attorneys. 5 to 10% of the total assets that go through probate, they're likely to be paid on. So if you want to keep those dollars in your estate and not going to attorneys, that's another reason to get wills and trusts and those types of things. It's a very powerful reason to do it. Some people need a simple trust. Some people need complex trust. Some people need a dynasty trust. Some people need irrevocable trust. So there's so many trusts out there. And we do encourage you to come in and see us because we will talk to you about those things. And full disclosure, we are allowed to talk to you about those things, but we are going to refer you to our attorneys because they're legally allowed to advise you on those things. But we'll at least start that conversation because it's super important. And this is just estate planning 101. There's so much more to learn about it. And we definitely implore everybody to make sure that estate plan's tied down. I had my estate plan tied down as soon as I had my kiddos, right? I thought it was really important in case I passed away earlier, who's going to get my stuff, right? And it can't be the kids, so there has to be somebody in line. And then there has to be rules that, like my trust followed personally, where as they're in college, they get a little bit. When they grow up, they get out of college, they have to have a job to even receive any interest, and later on in life. So I'm not leaving a trust fund to these kiddos, right? So I want them to work and do what they got to do.
Well, you just hit on an important point there. Everybody talks about you got to have a will, got to have a will, got to have a will. Well, a will is a document for after you die. And that's an important document. But a trust and some of these other documents that you talk about, power of attorney, healthcare surrogate, these kind of things to make medical decisions and financial decisions, that's if you're still alive. And those are just as important. So to have the entire look at what all the legal documents you really should have in your retirement years, in your elder years, is really an important conversation. And it's one that we'll have.
Yeah, and here's the thing is if you have a spouse or maybe you're single and you have to do some Medicaid spend down, or you're going into a long-term care facility, or you need home health care, more of a reason to get this stuff tied down because there's really cool strategies that helps preserve some of the assets.
To sit down and talk to Charisse about this particular area, it's an area where many of us need help, and we need an estate planning attorney. And Charisse has been working with estate planning attorneys and tax professionals in order to round out all of the services that you need in retirement. We can help. 833-368-3680 is our number, 833-368-3680, or online again, ZinniaWealth.com. All right, an article in USA Today says there's a few questions you should ask yourself before you retire. The most important is, what does a day in retirement look like to you? And if you can't answer that question, you need to start thinking about it. So I want to ask first, Charisse, how do you see people making that transition into retirement? It is a big one, and some people do really well with it. Some people don't. It takes a while. What do you see? Does it take 6 months? Does it take a year? I've heard some people say it took me 2 years to figure out who I am in retirement. What do you see with your clients?
What does a day in retirement look like to you? Nobody's thinking about that question. A lot of people just retire and then they're, okay, now what? Right? And so painting that picture. So I want everyone who's getting ready to retire in a couple of years, go old school. I want you to send me pictures, please. I would love to see this. Do you remember back in the day when you would cut out your house, dream house, and your car and your boat, and you put it on the refrigerator and you walk by it every day and you're like, I'm going to get that one day. And most people did. I want you to do the same thing as you're in retirement or preparing for retirement. And I want you to cut out pictures of the cruise ship and the trips you want to go on, the beach trips, the Europe trips, whatever it might be. And I want you to put it on the refrigerator because that is going to help you dream bigger in retirement and actually probably help you put that needle right in that little speck where it needs to go. And you're actually going to put a plan together for it because you can see it and you see it every day. So painting that picture and then doing something about it. So what happens normally, people retire and for 3 months they're doing honey-do lists. Truly, this is what I see. Sometimes the honey-do list stuff goes 6 months. I see a lot of times that in 12 months, they finally start considering their first big trip. I would say 6 out of 10 people, this is how it rolls. I want you ahead of time to start painting that picture. Look at retirement. What does it look like the day you step into it? And if it's doing nothing, maybe that's what you want. You're like, I want to do nothing for like a month, Charisse, and then that's it. But then I want you to go further and say, okay, now that we've done nothing for a month, now we're like, what do we do now? Because you've retired. You're like, okay, nobody's calling upon me for work. I'm not feeling so important. I feel like I should be doing something. Then really start to paint that picture. What are your dreams? What does that journey look like for the next 30 years? And I think people miss this part, Randy. And I think this is also why people work longer is because they're not really sure what they're going to do. They're not even sure if they have enough money to retire. So they don't have the plan for retirement. They're not working with an advisor that is creating income withdrawal strategies for them. And then they're also not envisioning what does retirement look like because you can't get outside of your work silo to actually go the distance. So I want to encourage people, just start dreaming big. You can dream big at any age. You don't have to just dream big in your 20s, 30s, and 40s. Now you've already done what we did in our 20s, 30s, 40s, and 50s. Now dream big about your trips. Paint that picture, cut out some images, put them on your refrigerator. And I'm going to tell you, it is game changing. I still to this day go old school and cut out pictures and put them on my refrigerator. It's fun.
Yeah, it's so important to have not only a plan for your money, but a plan for your time as well. Dream big and bring those dreams in as you sit down with Charisse and go through our portfolio x-ray to sit down and really talk about your retirement. Because Charisse, there's a lot of people that may not know what they want to do, but there's a lot of people that are kind of at the starting gate ready to go, and they can't wait to put those travel plans in place.
Yeah, and don't forget, when you retire, the next 10 years, I'm going to tell you, it's going to be the healthiest 10 years you will ever see. Those are your go-go years. You're going to get up and go and do stuff. Don't waste that time. Because after 10 years, people, we call it the slow go, and then we got the no-go. You slow down, and then you just really start to do nothing because you're tired of the cruises, you're tired of the travel. Body starts to hurt. Health issues start to arise. And then, you know, when health issues arise, you're like, gosh, I wish I would have traveled and did that Alaska trip for 2 weeks where I can get off the ship and go walk around and do all these tours. Don't be that person that was a coulda, woulda, shoulda. I hear it so often when people come in and they're like, gosh, Charisse, I just wish I would have met you 10 years ago. I would have done this so much sooner because now I can't. I hear it all the time, and it's debilitating for the person. It brings confidence levels down. It'll make you age faster. You start to get in your own head. So experience life. It's all about opportunities. It's not about your calendar and all these tasks you got to put on the calendar. Take time for yourself. And when you are retired, there should not be a calendar anymore. I mean, yeah, I know you got your doctor's appointments. The calendar should be, what am I doing that's going to be fun? What am I going to do this week that's going to help others and give back and maybe volunteer? What is my honey-do list? Like, add them all in. But the experience is what you have worked your entire life for, that journey, those golden years where you're supposed to set sail into retirement and travel the world, or maybe you don't like traveling, but you're doing things locally. Whatever it is, just do it.
Give us a call. Let's talk about your plan for retirement, not just financially, but the dreams that you have, putting the money with the dreams so you can do all that fun stuff. 833-368-3680, 833-368-3680, or use our website, zinniawealth.com, ZINNIA wealth.com. There's a gold box there. It says complimentary retirement consultation. Click on that, and you'll be on your way. Charisse, is all the time we have on this one. I'll give you the last word.
Well, thank you all for tuning in once again. And as usual, live by design and not by default. And we'll see you here next week.
This has been Retirement Coffee Talk. To find out more about how the strategies we've discussed on this program can build the retirement you've been wanting, call Zinnia Wealth at 352-368-3680 or visit us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Charisse Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and or categories usually do not deduct transaction and or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.